Welcome to CC Investment Talk. I am CC. Some of you probably are users of the mobile app called TikTok, but have you also heard of another app called Kuaishou? TikTok in China is called Douyin. It's undoubtedly the biggest player in the short video industry in terms of the total usage time, which is calculated using number of daily active users multiplied by daily average time per person. Number 2 in this industry is Kuaishou, which literally means fast hand in Chinese. Kushou Technology went public on Feb 5th in Hong Kong. Its IPO offering price was 115 Hong Kong dollar per share. However, just on the first day, the price soared up by 160%, making its market cap bigger than JD.com, which is the second biggest e-commerce company in China. Kuaishou's IPO was the largest in global IT sector ever since Uber's initial public offering back in 2019, and Kuaishou raised $5.4 billion. Kuaishou's IPO also attracted many top institutional investors. BlackRock and Abu Dhabi Investment Authority are cornerstone investors. Just a quick FYI, cornerstone investor is actually a pretty unique idea to the Hong Kong market. Usually, only the top institutionals can be qualified as cornerstone investors. Their investment will be locked down for a period of 6 months or longer. It's very obvious that this will give the market more confidence to invest in a company which has no track record. Also, other renowned investors such as the Capital Group, the Canadian Pension Plan Investment Board, Fidelity, etc. also participated. By the way, China's biggest IT company, Tencent, also owns about 20% of Kuaishou. So, what is Kuaishou? How do they make money? I'll share with you today. Short video has become an increasingly popular format in social media today. There are probably two reasons. First is the internet speed has gone up significantly while the cost went down by a lot. The top left chart shows the per gigabyte cost by the top 3 telecom operators in China, which are China Mobile, China Unicom, China Telecom, has went down by about 250 times in just 8 years' time. Another reason is probably that video itself is able to catch the richest details, and it doesn't have any barrier for anyone with a phone to make one. The bottom left chart also shows the size of short video market grew explosively by over 3 times. And that's from 2016 to 2020. So, as the 5G network develops, short video will only become more and more popular. Kuaishou was founded about 10 years ago. As mentioned just now, it is the second biggest short video app in China now. Just for everyone's information, although TikTok is the biggest in this sector, if you compare across the entire social network app space in China, Tencent's WeChat is still much bigger. However, in terms of short video, I would totally want to buy shares of TikTok, but unfortunately, it's still a private company right now. Back to Kuaishou, a short video company typically has a few ways to make money. First is revenue from live streaming. How does it work? Basically, there could be good-looking girls or boys, or essentially anyone singing or dancing, or showing their talents behind the camera. As viewers, you can give them virtual gifts such as flowers or a virtual rocket to show your likes and appreciation. You need to pay actual money for these virtual gifts though. This can be very addictive actually. It's not uncommon to see children or even adults sometimes spend over what they can afford on virtual gifting. The revenue on these gifts will be shared by the streamers and the app platform. The second revenue channel is e-commerce. It has become increasingly popular in China for customers to buy directly from the streamers while watching them display a snack or skincare products. Another channel is online marketing. This can appear in different forms, such as among the content or on the waiting page when you open the app. Every time when you view or click on the advertisement, this will contribute to the revenue. Kuaishou also has one more small business on top of these, and that is their online games. Let's take a look at these business segments of Kuaishou one by one. First of all, live streaming. This is probably the most important business to Kuaishou at this moment. It contributes to about 80% of the company's revenue back in 2019. So when a new user registers the app, they need to provide some basic information such as the gender, location, and interests. This information will help Kuaishou recommend or push content which you might be interested in. Your usage behavior, such as your comments, likes, will then help Kuaishou complete your profile, so they will distribute more relevant content to you. Kuaishou also has a function which allows you to see the content around your location. Also, Kuaishou's content recommendation algorithm is actually different from TikTok's. It aims to give everyone an equal opportunity to showcase their lives. Therefore, even if the content is very popular now, as time goes by, it will actually receive less clicks. However, in TikTok, popular content will just continue to gain even more attention and clicks. I also want to share some stats in Kuaishou's live streaming business. As mentioned before, Kuaishou has a very big base of daily active users in China. As of the first half of 2020, Kuaishou had 170 million daily active users. The second player in this market is called YY, but its DAU from the same period was just less than 10% of Kuaishou. It also has a good payment ratio, which was 13%. This means among 100 viewers, 13 people would pay, and this contributed to a revenue of $2.7 billion. YY's performance on these two metrics were 10% and 1.1 billion. There's a pretty big gap there. In terms of the average payment per user or average revenue per user, Kuaishou is relatively low, but this is not necessarily a bad thing. Let's say if their app companies were to lose 1 million fee-paying companies, which I hope doesn't happen, this would actually have a much bigger impact on YY than on Kuaishou. So Kuaishou's live streaming business is actually more resilient than competitors. In the future, if Kuaishou can organically increase the payment ratio by improving the quality and diversity of its content, with its bigger user base and higher stickiness, it can easily generate a very large revenue. Let's move on to its online marketing business. In 2019, Kuaishou's monthly active users was 330 million. Its advertisement revenue was $1.1 billion. So the average revenue per user was about $3.5. This is a low number compared to the other internet companies. For example, Facebook's ARPU in 2019 was $24.1, and Kuaishou's closest competitor, TikTok, also had an ARPU of about $18, which is more than 5 times of that of Kuaishou. I have seen brokers' research on the reasons of such big difference. However, just from a user's perspective, I just think the biggest reason is that Kuaishou's users are really not the type of audience that the company would want to reach the most. Kuaishou's vibe and user base is very deeply intertwined with the grassroots culture. The majority of Kuaishou's users are actually from the lower tier cities in China, and a lot of them are actually from the northern part. And the economy is usually less developed in these areas. However, Kuaishou is also changing. They are improving their app designing, and they are also trying to collaborate with celebrities and major multi-channel networks. And this could potentially attract more users from the top-tier cities such as Beijing, Shanghai, or Shenzhen. In 2019, online marketing contributed about 15.6% to the company's revenue, but there is still huge growth potential. The last part is e-commerce and online games. Both are grouped under other services in Kuaishou's financial report, and this only accounted for 0.6% of the company's revenue. Kuaishou's e-commerce can be called live streaming e-commerce or social network e-commerce. Compared to traditional shopping, or even shopping on Amazon or Taobao a few years ago, this makes the shopping experience even more convenient and interactive. Because the interaction between the seller and customer is alive, so you can easily see how the lipstick or shoes you like will look like on a real person. Also, because the streamer or the seller oftentimes are the business owners, they can adjust their price and control their inventory based on the live reaction from the potential customers. Again, because Kuaishou has a huge user base. There is a big potential in e-commerce. However, in terms of the monetization rate, Kuaishou still needs to catch up. Monetization rate is calculated using revenue divided by gross merchandise volume, which is what we usually refer to as GMV. I guess you can simply understand it as how efficient an e-commerce company platform makes money. Kuaishou's monetization rate is just at 0.74%. However, Alibaba has 4.3%. This means on every 1 billion GMV, Alibaba can make 40 million, but Kuaishou makes only 7.4 million, which is a pretty big gap too. Also, touching on Kuaishou's online games business, they acquired a few companies in this industry and also made strategic investments. Also, they developed their games in-house. So, above is the main businesses of Kuaishou, this company, but they have also expanded to more diversified business at the same time, such as apps for lifestyle sharing, knowledge sharing, and photo editing. Alright, this is Kuaishou in a nutshell. I personally am still very confident in the short video industry. Quoting from the financial report of Kuaishou, video is an increasingly popular content format for online experiences as it catches the richness of moments and makes real-time engagement more natural and close to in-person. The proliferation on the mobile internet and development of smart devices, bandwidth, and mobile infrastructure, particularly the expansion of 4G and introduction of 5G, will continue to spur this development. Kuaishou, as the only public traded stock in this industry, is definitely worth your attention. Please follow CC Investment Talk. I will continue to share with you other interesting industries and companies. See you next time.